Hello, Chapter 1 Problems. This is the fourth problem for Chapter 1. Problem 142, Preparing Financial Statements. Presented here are the accounts of the Pembroke Bookkeeping Company for the year ended December 31st, 2016. Now here we have a set of accounts. Then he's asking to prepare income statement of owner's equity and balance sheet. Okay, so let's go through these accounts and figure out, is it an asset account, a liability, or an equity account? Okay, let's start with the land. It is an asset. Notes payable, anything payable, we said it's a liability account. Property tax expense, it's an expense account, so we're gonna use it in the income statement. White withdrawals, so withdrawals, it's an equity account. White means the owner. Rent expense, it's an expense account, so in the income statement. Salaries expense will also be in the income statement. Salaries payable, it's a liability account. Service revenue, it's revenue, so it's also in the income statement. Office supplies, it's an asset account. White capital, December 31st, 2015. Okay, so this is equity account. This is the owner name, White capital. And December 31st, 2015 means ending of 2015, which is beginning for 2016. Owner contribution 2016 means any contribution or investment made during 2016, so it's in the equity statement. Accounts payable, anything payable is liability. Accounts receivable, it's an asset account. Advertising expense, it's an expense, so it's in the income statement. Building is an asset. Cash, it's also an asset. Equipment, it's an asset. Insurance expense, it's an expense, so it's in the income statement. And last one, interest expense, so it's going to be also in the income statement. Now, let's do the requirements. In the income statement, we're going to need revenues and expenses. Okay, so first of all, we need to start with the company name, then income statement, then year ended December 31st, 2016. Okay, so you're gonna do that. Now I'm gonna start with revenues. Okay, then we're gonna list down our expenses. Then we're gonna subtract expenses from revenues, and we're gonna see if it's net income or net loss. Okay, so I'm gonna go back to the question and let's check what are our revenues. In the first column, we had service revenue, and the amount was 175,000. Now I need to list down all of my expenses. So in the first column, we had property tax expense. And the amount is 3,100. You can check the file mentioned in the description area. Okay, so you can print it and solve it by yourself. And here the second one, we have rent expense, 8,000. Then salaries expense, 64,000. So we are done with the expenses in the first column. Let's go to the second column. We have advertising. And the amount is 20,000. Then we have insurance expense. $1,600. And last one, interest expense. $6,900. Okay, now let's find total expenses. Total expenses is 103,600. So now, as you can see, my total revenues are greater than my total expenses. So I'm gonna get a positive answer when I subtract. So revenues less expenses equals net income or net loss. For this question, we're gonna have positive 71,400. Since it's positive, it's gonna be net income. If you get a negative answer, it means it's a net loss. Now, the second requirement for this question is to prepare the owner's equity statement, in which I need to report the changes in equity. So we're gonna start with the company's name, then the statement name, which is statement of owner's equity, then year ended December 31st, 2016. Okay? Now, our formula will be beginning capital. I'm gonna add to it owner contribution. Then I'm gonna add to it net income or net loss. For this question, it was net income less withdrawals equals ending capital. Now he's asking to prepare the equity statement for 2016. So beginning capital for 2016 will be the ending for 2015. So it was 50,000. I add to it owner contribution. From the second column, it's 31,000 plus net income. From the income statement, you're gonna get it, it's 71,400 less withdrawals from the first column, it's 27,000 equals ending capital. So ending capital for 2016, it's gonna be 125,400. Now the third requirement is to prepare the balance sheet. To prepare the balance sheet, you need to write first the company's name, then the statement name, which is balance sheet, then the date, which is December 31st, 2016. Okay, you don't need to write year ended 2016, no, only December 31st, 2016. And in the balance sheet, you need to write the equation, which is assets equals liabilities plus equity. So we need to list down our assets, okay, liabilities, accounts, and equity. Keep in mind, under equity, we're gonna write only the ending capital that we just got in the owner's equity statement, which is 125,400. Now let's see, what are our assets here? We need to list them according to liquidity, okay? So first we need to write cash. Cash, from the second column it's 2,800. Then accounts receivable, from the second column it's 1,600. Okay, as you can see, you're gonna use each account only once, so you're not gonna use the same account in two statements. Okay, so I do it this way. When you want to solve, just cross any account you use, okay, not to use it twice. So we are done with cash, we are done with accounts receivable. Now let's see, we have office supplies from the first column, it's 8,000. Now you need to list down your long-term assets, which is equipment, building and land. So for the equipment, from the second column it's 13,000. Then building, from the second column it's 127,600. And last asset account will be land, and the amount is 12,000. So we are done with assets. Now let's check our liabilities. The first one is accounts payable. From the second column it's 10,000. Then anything payable, we have salaries payable from the first column, and the amount is 1,600. Then we have notes payable. Notes payable means I'm gonna pay this amount plus interest later, which is 28,000. So do we have anything payable also? I think we are done with the accounts here. Now total assets will be 165,000. Total liabilities will be 39,600. Now let's see, liabilities plus equity. So again, your assets should equal your liabilities plus equity. Now 39,600 plus 125,400, it is also 165, so it's balanced. It means it's correct. Hope that it was helpful. Thank you for watching. If you have any question, please leave a comment. Please like, share and subscribe.